going on, everybody? It's your boy Minnie back with another video, and today I want to talk about a little more in depth about the market. So let's go into why the market shifts and how market makers really start to make more money. So the beginning of May, right, we've seen some strength, a lot of strength in the market. The first day of May was really slow, but now as we're coming to an end of May, or like the middle towards the end, right, we started to see a lot of volume come into the market, right, on these small caps. And we saw that, okay, because there's so much volume, we can put on more risk on the table, right? So market makers control the market. They're getting us comfortable, right? And the market always runs in cycles. So if it's slow, you know, they're gonna get people used to the slow market, and then they're gonna heat it up so people are not used to it. And then by the time it heats up, right, by the time it heats up and everyone's starting to put more risk on the table and they see a lot more liquidity coming into the market, they're gonna start drying it up. And because there's so many people that are still trapped thinking that there's gonna be so much, you know, a lot of momentum, market makers shift it. So that's how they operate, right? That's how they make money. And as a retail trader, and as, you know, as a retail trader, we have to kind of understand these shifts. We have to understand that this is always going to be a part of the market. Now, we can't hate it. I mean, sure, you can hate it, but it doesn't mean that there's something going to happen about that, right? It's always going to happen. Market makers need to make money. Retail traders want to make money. So there needs to be, right? There needs to be a sense of difference. So how do you adapt to that? Like for the past, or so last week was really, really hot. And typically what I like to look for on Fridays, right, to end the week, going into the weekend and starting Mondays off, I really like to look for stocks and just overall market squeeze, right, on Friday. I like to look for stocks that go absolutely nuclear, shorts getting burned, because I'm a long bias trader, remember? So being a long bias trader, I love seeing shorts getting burned, right? And on Friday, we saw TCBP have an explosive run. We saw TCBP have an explosive run. And towards the end of the week, like I said, I like to see shorts getting, you know, way too comfortable and they get squeezed out. So going into the next week, you know, they start to get really scared. And that's typically what we see on strong Fridays, right? So that's what we saw this week as well. Friday into Monday was pretty strong. Friday was really strong. Monday was decent. Tuesday and Wednesday, which is today and yesterday, right, it started to really really dry up. So I noticed that a lot of people were not able to shift in that, right? I saw a lot of people losing a lot of money, expecting something from the market, expecting that there wasn't going to be a shift. Now, I don't always talk about a shift, but you have to have that in the back of your mind that, hey, just because today was hot does not mean tomorrow is going to be just as hot. These stocks run different. There's algorithms and market makers that own a lot of these companies, right? They have a lot of shares. Like, for example, if Citadel has one, or another high frequency trading firm owns a lot of these shares, and, you know, they're manipulating these stocks, they all work very different. So just because a stock is, you know, running does not mean that, just because a stock goes nuclear on Friday or Monday, does not mean that the next day is going to be super, super hot, right? So that's what you need to take into account, and I think that's what a lot of traders really mess up. And when I started, I used to think that, you know, I'm unstoppable, the market is always going to be hot. That's kind of how the COVID market taught us, right? The COVID market taught us bad habits. The COVID market, you know, I was trading from my bed. I was doing the worst habits, but I was still making a crap ton of money, right? It wasn't even funny how much money I was making. So you can kind of understand what market makers do and how do you adapt to a change like this. Well, once you realize pre-market trading will set the tone for the week or for the day, right? So if you see a strong pre-market or a really strong pre-market where all the volume and all the runners are in pre-market, typically you see those runners fade. For example, if you see a stock up 300% in pre-market, does that really have much more room to go? From a realistic perspective, sure, if there's a short squeeze, which doesn't happen, you know, you can't live off of that, right? But they happen, right? But you can't depend your trading on something that happens 1 out of 10 days, right? So on something repeatable, you can't really depend on a short squeeze. So if there's a 300% runner in pre-market, right? 300% runner, do you think that has much room to go in the market open? Well, no, not really, versus a stock that has unnoticed news or something that's starting to catch volume, or that made a pop, dip back down, is now up 20%, has a nice chart, has a nice float. That has a lot more room to go to 100% rather than something that's up 300%, manipulated by so many other market makers, 30-40 million volume, probably 10% of that is retail traders, right? So if that's so manipulated, do you think the chances of that going to 500% are more? Or is it a better risk to reward trade to take something that's 20% up with news, with a nice setup, anticipating more volume will come in? Probably that setup, right? And that's what I did on SGD today, SGD and ISUN. There was another stock, RENB, which was a coffee, they had news about coffee or something. We talked about that, we got nice scalps on it, but my focus was on SGD. I made 50% on it, right? I made 50% on the total run, my total returns on that. And how did that happen? That was simply because I focused on the stocks that not everyone was looking at, not overcrowded. It had, you know, it had earnings, and it was a good flow. It was a nice setup, and I anticipated volume to come in. Nothing else was running. We went over the pre-market plan on YouTube, and we stick to our fundamentals, right? We don't rush into trades out the open. We don't have super high expectations coming in for Monday and Tuesday, right? You keep your expectations limited, and you perform what the market gives you. And I think that's what a lot of people kind of struggle with, right? Just being patient. That's one of the toughest things that I had to overcome, especially as a habitually impatient person, right? I've always wanted everything now. Like, I didn't used to go to the gym because I didn't want to work for it, right? I wanted to just get big instantly. It's a lack of patience, right? And that resulted into my trading. But now, as you grow as a trader, that's why I say trading is not really just a job, but it's more so an area of self-growth. Like, I would never, you guys can see this car, it's a blessing from God, but I would have never be able to had it turning to the man that I am, right? It's made me a man, it's made me think differently, it's made me kind of enjoy life more, it's made me more serious as a person, and I can never be more thankful for that. So that's kind of what I want to talk about, market shifts. So make sure you guys are being a little bit more safe every single day, knowing market shifts and market conditions before you do put on risk on the table. Start to value your money a little bit more. I think that's a lesson you guys should take from this video. Start to value your own money, because you work hard for your money, right? It doesn't just fall out the sky. So you work hard for your money, so start valuing your money, raise your standards, start only taking A+ setups. If you see a setup, then trade it. If you don't see a setup, don't force the trade. If there's no setup, if there's no risk to reward, then why force the trade? Because you're just putting yourself in a hole to lose money, right? So if you start valuing your money, raising your standards, you'll start to enjoy trading a lot more. 1 to 2 trade setups is really all you need a day. 1 to 2 trade setups. Everyone wants to focus on, I mean, there's hyper scalping, right? But that's not what I do. I focus on 1 to 2 trade setups. That's where I make my money. So that's kind of what I want to talk about. If you guys enjoy these new types of videos, I hope you guys do enjoy it. I want to keep it more raw and real. That's kind of what I like. You know, on the YouTube streams, on YouTube education, I'm all about education. I'm all about teaching you guys what's going on in the market, because I spend hours every single day behind the screen. I recap my trades. You know, I'm always behind the screen. So I learn a lot just by screen time and teaching other people. It helps me also. So if you guys enjoy, make sure you guys subscribe, comment if you guys enjoy these types of videos, drop a like. I'll see you guys in the next one. Peace out.